Hey guys, what's happening? I want to give you this month's market update. What's going on? It is currently October 15th. I want to give you a quick recap of what's happened in September. So a lot of you know the federal funds or the Federal Reserve decided to lower the federal funds rate by 0.5 point. And as a result, we've actually seen mortgage rates go up a little bit. And so I'm going to talk a little bit about what might be causing that. The federal funds rate and mortgage rates are not exactly tied together. The federal funds rate is the overnight borrowing rate that banks use to loan money on a short-term basis, meaning just overnight, versus the federal funds, the mortgage rate is actually looking at long-term trends. The mortgage rate is going to be in place for 30 years. And so that's what the banks are comfortable loaning the money at, assuming risk. So you saw them expect the rate cut. And so you saw rates drop prior to that. And then once we actually got the rate cut, you've actually seen rates tick back up a little bit. So let's talk about what impact that's having on the market and kind of what we expect to see. As far as we can tell, the Feds will meet again in November and December, probably expected to lower the rates by another 1/4 point each time, which will overall be positive news for us in the long run. And you'll probably start to see that show up in the mortgage rates in the next few weeks. It'll move it marginally, guys, right? So you're probably bumping around in the high 5s, low 6s for the foreseeable future, probably by the end of 25. So maybe a year from now, you may be closer to that 5.5 or 5, but I would not allow that to allow my clients to wait on making a move. And so some of the things we just want to kind of look at here, I've shown you guys this before, but this middle column, the pending business, you can see here last week we're at 549 homes pended. This is for Wilson, Davidson, Rutherford, and Sumner County. So we pull the same data, been pulling it now for over 2 years. You kind of see the week before, 574, 549. Anytime that's in the 5s, that's a real concern for us. Usually see that on like holiday weekends here, like the 4th of July. But you really got to go all the way back to the first week of January, the end of December over the holidays to find pending data that low. So what does that tell us, right? As I look at this graph here, kind of see this red line here in the middle, the new pendings in the last 7 days, continuing to kind of trend lower. Just kind of saw it actually peaked back in March. We didn't see that seasonal spike this summer. And so continuing to see it trend lower. So what does all that mean for you and your clients? Remember, the market does not dictate your business. The market is just a snapshot of what's going on. Very fortunate to be in this market here in Middle Tennessee with healthy home sales happening, right? So right now in September, slight increase in closings being up. Pending home sales actually up 5.5% over September of 23. So that's all positive news. With the election looming here in October, it's likely to be quiet. Remember, November is usually one of the slowest months of the year for closings, whether there's an election or not. This year just being amplified by an upcoming election. So October, historically, you got fall break, got a lot going on. Kids are back in school, sports are going on. So you have people generally not moving right now, not writing contracts. So September numbers actually look up. I think October, you can already see based off the market data, expecting to be a little bit slower than October, which will trend on par for a weak November, which then again, we should see a bounce as federal funds start to get cut. We get past this election, rolling into 25. As you're starting to do business planning, I want you to be thinking about the market increase. Last year, so here's all the data. I can send this out if you're a data geek and want to just geek out on it. Unemployment's fine. Unemployment looks fine. It's kind of the concern. GDP is great. The thing I want you to see, inflation seems to be taking care of itself, so we're starting to see that trend going down. Is the annual home sales, right? So in 23, we had 4.1 million sides or 4.1 million transactions across the country. They're projecting 4.2. I don't think we get there. I'll be shocked if we actually break 4, which you'd see. We'd have to go all the way back to 1995 to find a year where we sold less than 4 million homes. Even in 08, we sold 4.1. So as we kind of look at this, you'd have to have a really strong November and December closings, which doesn't seem to be the case. But what I want you to think about is you're going to see these lows, and they tend to happen in kind of 4-year periods. But 25, you should see a bump up. So as you're business planning, I'd start to think about us potentially hitting 4.3, 4.4 million sides next year. Maybe we have a big year, maybe more. But your market is going to start working a little more in your favor. You're going to get a little bit of the wind at your back. So as you're thinking about 2025, I want you to think about your business. I want you to look at what you did this year and at a minimum increase it by 10%, because the market should give you some gifts in 2025 and definitely in 2026. So just be thinking about that as your business planning. If you haven't attended one of our business planning clinics, please reach out to me, join us. Still doing several around the country. Happy to do another one locally if you guys want it or need it. If you have any questions, want to talk about the market, love to share information, talk shop, just help you get prepared for the best Q4 and 2025 possible. Take care, guys.